Hey everyone, welcome back to the channel. If you're looking to make money online and explore the world of day trading while working from home, well, you're in the right place. Today we're diving into an exciting day trade that we executed on EVGO, October 3rd, 2024. So grab your notebooks because we're going to cover some key strategies, market behaviors, and insights that could help you boost your trading game. So let's get right into it. On October 3rd, EVGO was on our radar. We had it on our watch list in the private trade plan room with all of the targets that we needed to be concerned with. And I made a special note that indicating that it is a high float stock, which is usually a slow mover. But this is a short squeeze due to news and very high short interest. And I also noted to the group to expect sideways action between $5.90 and $6.45. Right out the gate, the opening range showed that $5.40, which is this horizontal line, was beginning to be a strong resistance level from opening bell all the way to around 7:45. This is critical information for any day trader because understanding where resistance lies can help us plan our trades effectively. Our game plan was simple. We would wait for a signal to break above that resistance line. Patience is key in trading, especially when working from home where distractions are everywhere. And guess what? Between 8:08 a.m. and 8:38 a.m., we had a series of very low risk, high profit buy signals pop up. And that's our signal. Plus, price refused to sell below the 50 EMA. Giving us even more confirmation to enter the trade. Our entry point was this candle here, where we had sufficient confirmation that price was holding the 50 EMA and it was above our resistance level. So we entered at $5.45. Our stop loss was previous resistance level of $5.40. Our target was either this line right here at $5.95, or we would wait for our first red candle to exit if price continued past this line. And I shaded this zone because I could tell from the daily chart that this was going to be a sideways action or a chop zone. So I wanted to note that on my chart. And so as you can see, price found our target, but it held the 20 EMA. That's this white line right here. And this dark blue line is the 50 EMA. But price held our 20 EMA right at our target line. So that told us, okay, go ahead and stay with it into the greed zone, but we'll stay with it until we had our first red candle. And the other confirmation for staying with this trade above this level was this big candle. That was a breakout candle, breaking above this little resistance area over here at 595. And as you can see, we had our first red candle here, and that's where we exited. We were able to sell at $6.39. So we made nearly $1 per share on this trade. And that was a solid move for us. But what I wanted you to notice here in this greed zone, and this is why I call it the greed zone, if you have a momentum move through a target like this, or above a target without coming back to like the 50 EMA or some major support, I like to see a tail on a major support level. We didn't see that. We just saw price continuously holding this 9 EMA, which is this light blue dashed. And then we saw the greed take over right here. Literally 1 penny shy of our $6.45 target. You see that? 1 penny shy. So if we were waiting for it to push through that target and sell there, it just didn't happen. So this is why I call it the greed zone. Sometimes you can stay with a trade past your target and wait for that first red candle. A lot of times they'll be a doozy. I mean, this one sold all the way down from that $6.40 all the way down to $6.06 in one candle. That's a big candle. We were able to fortunately get out at $6.39, but that was still shy of the $6.45 target. And I expected something like that to happen. I didn't think it would get that close. But when you have these momentum moves like that, where price continues to surge past the target, and you have this huge bullish candle saying, hey, we're going to keep going, you can stay with the trade. You can use the 9 EMA, or you can wait for that first red candle, which we got the red candle through the 9 EMA anyway. It actually pierced 20, but that was our exit. So trading with only $5,000 in your trading account, getting in at $5.46 and exiting $6.39, that trade would have made you $850 in about an hour. So that's not bad. And that's how you can trade the opening range. But let's dive deeper into the concept of this greed zone. Like I said, this is where price surges past your target. Here it hesitated at our target. You see these several candles, but it caught the 20 EMA and then it pushed hard all the way up to within 1 penny of our next target. And so here's the catch. Even though you see this strong bullish signal, it's going to pull back before reaching your target. And whenever I see this happen, it's more than 99% of the time it will fail to reach the next target. And so that's why right at around 9:39 a.m. my time, we noticed price starting to stall and weaken. You see how this candle was smaller than the previous candle, within just a penny of that target. And it's frustrating, I know. So this is where traders really need to be cautious and be aware of a few dynamics at play that are responsible for this happening, okay? So let's discuss order flow and liquidity. Traders frequently place buy or sell orders at specific price levels, historical levels, and round numbers. When price nears a target, it can trigger profit taking or cause institutions to place large orders that may reverse the move. This candle here was 500,000. This one was 800,000. Then it started to drop. Volume was only 600,000. That's your first signal that, hey, things are weakening. And then this red candle was over 1 million shares. And that tells us that institutions are recognizing this candle here, and that's when they jump in and sell. Okay, they see that it's not going to make this next target and they unload fast. And that's why we saw this reversal. Okay, and yes, that was definitely a reversal. It failed at the 20 EMA, it failed at the 50 EMA, it failed at this previous target of $5.95, and then it tried to reclaim the 50. It couldn't do it. It couldn't do it. It couldn't reclaim here again at the $5.95 level. And, you know, I had this shaded because I knew this was going to be a choppy zone or a sideways zone because of what I saw on the daily chart in this range. And you can see how it just did. It went sideways for the rest of the day. And we took this trade here because it was above that $5.95. We had a nice buy signal and we held on all the way to our next target of $6.45. And that's where we exited. But getting back to the topic of the greed zone, if there's lack of liquidity at certain levels, it might lead to the price falling short of hitting its next target by a few pennies. That's one of the factors at play. Another factor was, like I mentioned earlier, the institutions. Notice this candle here, the weaker volume, and then they dumped right here. Over 1 million shares being traded on that candle. This is a crucial concept. If you want to make money online trading stocks from home, you need to understand liquidity and order flow. And really, you don't need to understand them other than understanding the price action and volume. And another factor at play is psychological resistance. Traders often become defensive as price approaches key levels, leading to profit taking or increased selling. And this is especially true for stocks with high short interest like EVGO. Everybody knew this one had a very high short interest. Many traders place their stops or profit targets just below the historical levels, right? This was the historical level right here. And so they'll place their sell orders just below that because they know there's short interest and they don't want to get caught in the selling when that starts to kick in. So they place their sell orders just below a target where they know everyone else is looking to take profits. That gets them out faster and they're selling into the greed to the buyers who see these big tall candles. So understanding these psychological barriers can be the difference between a profitable trade and a loss. Now let's touch on the EMA pullback behavior. When price hits the greed zone and falls short like it did here, a retracement to a major EMA allows the market to reset and find support. This gives it strength to make another attempt at that missed target. But in this case, you can see that, hey, it failed at the 50, like I said, and it failed at this historical target of $5.95. And it couldn't reclaim it until here. And this was where we took our next trade, and we just held on. It was sketchy here a couple of times, but we held on to the target. So what do we take away from today's trade on EVGO? Right here, we identified resistance and support down here. This was the opening range, right? This was the opening range. Then we wait for a signal above resistance. Here was a signal, but you need to know your risk. What's your risk? Is it going to be this line or is it going to be the 50? We needed a little more convincing, so we waited and we got in here. We waited for a low risk buy alert with confirmation. And so we waited until this candle at 8:39 a.m. my time. Takeaway number 3. Understand the greed zone, which is when price surges above a target level, you know you're in the greed zone. If you had sold here and you saw this surge here and got in, just understand that you are trading in a greed zone because price really hadn't proven the 50 EMA after reaching this target here. It had been riding the 20 EMA. So at some point, it's going to need to come back down and tell us what it wants to do with that 50 EMA. Here it held on, but it was underneath the 20 EMA. So that wasn't a very good entry at this signal. And here it failed at the 50, like I said. So understand the greed zone, understand the EMAs, and use them wisely, like we did here. It reclaimed the EMA and it proved it on this candle. Yes, we were back in the choppy zone. So understanding what your stop loss in this case, which was this line here, this $5.95 historical level, that was going to be our stop. And then we just held on because everything above that's going to be green. Okay. And we held on all the way to our $6.45 target right here, which it did touch. And now it's just going sideways. Thank you for tuning in today, and if you found this video helpful, make sure to hit that like button and subscribe for more trading insights. And I also have a free web class at momentumstocktraders.com. If you want to take advantage of that, it's totally free, and it teaches you some amazing secrets that will put you in the top tier of the most profitable day traders out there. So until next time, keep trading smart.